the Reserve Bank of India, in terms of its long-standing policy, is that we intervene only during episodes of undue volatility. Our current account is low, and it has been low for some time now, and it's at a level that is easily financeable. So in that sense, the rupee is broadly where it should be.
Well, the rupee is broadly where it should be. That was the Reserve Bank governor just a few weeks back. To be precise, on the 17th of February. Since then, the Indian currency has grown at least by about 2%. So, is the rupee now broadly where it should be? Good evening and welcome to this special show on the rise and rise of the rupee. I'm Venkatesh. On the show this evening, we will be joined by three money market experts: Sajjid Chinoy, the economist from JPMorgan; NS Venkatesh, Executive Director, Lakshmi Vilas Bank; and Deepali, Bhargava, the economist from Credit Suisse. Before we start discussing with them whether the rupee is overvalued, where the rupee can head from here, here's how the rupee has impacted the economy itself, or likely to impact the economy itself. The rupee, in the first place, no country likes its currency to become overvalued. But if you looked at the real effective exchange rate, which is the rate at which you can compare the rupee neutrally to other currencies, it does look like the Indian currency is at least 10% stronger than the Chinese yuan on a year-on-year terms. And of course, versus most other currencies, in the Indian rupee has appreciated or at least depreciated much less than other EM currencies. What happened in the last 48 hours is what we are describing. Yesterday, because of the strong gush of foreigners buying Indian shares, they come in with dollars and sold the dollars, and the dollar became as cheap as 66.10. At that point, the Reserve Bank came in and bought dollars, supported at 66.10. But when it found the onslaught of dollars continuous, it just abandoned that level. Today, early morning, it was always expected that the rupee will start very strong, and that's what it did. It started as strong as 65.40, the cheapest that the dollar has been since the November 1st, 2015, that is 16 months ago. The dollar onslaught continued, but the RBI seems to have been buying dollars. At least the public sector banks were buying dollars and supporting it between 65.40 and 65.50. Where do we go from here? It's a little difficult to analyze or come to any conclusion. It does look that once the foreigners start buying Indian equities, they haven't been buying from January, February onwards. We have seen India rather avoided. It's only in March that they started buying, but it was much higher after the Uttar Pradesh election results were announced. Now, to what extent will this onslaught of dollars continue at the pace of 3,000, 4,000 crores a day? It's not likely to continue for long, but it's likely to continue in driblets. And therefore, does the dollar get cheaper than 65 rupees? Does it go to 64.5? At what point will the Reserve Bank say thus far and no further and come in with a bang? These are very, very difficult questions to answer. And precisely to therefore gauge how much more the rupee can appreciate and whether it is bad for the currency, whether it is bad for the economy. That's what we want to discuss. And to discuss that, we are joined now by NS Venkatesh, the Executive Director of Lakshmi Vilas Bank; Deepali, Bhargava, economist, Credit Suisse; as well as Sajjid Chinoy, economist at JPMorgan. Sajjid, Deepali and Mr. Venkatesh, thank you very much for joining in. Let me start with you, Mr. Venkatesh. What is the sense you're getting? Does the dollar become, as cheap as 65?
At the rate at which it had really moved today, I would say that maybe when we looked at the technicals, it should more or less get stopped at somewhere around 65.10. That is what we are seeing on the technical side. There has been mainly because of the, like what you suggested, it is mainly because of the foreigners pushing in the money because they were taking bets on the equity due to the UP elections, and they believe that essentially the stability will ensure that more economic reforms could be there. I would say that 65.10, I don't see at this particular point of time it breaking the 65 in the near term.
Okay. Just hold on, Mr. Venkatesh. Let me invite Deepali Bhargava also to this conversation. Deepali, do you have a view about, how much stronger the rupee can go broadly? I mean, not in the near term, but say over the next 6 months, do you see more strength for the rupee than weakness?
Right. So I think, Lata, it's two parts, really, the view. So I think one is really in a background, which is like a solid growth background for EM, with an outlook for Fed rate hikes to remain gradual and, USG G3 kind of stuck in ranges rather than trending. So this mix, I think, is positive for carry, and that's what we've been saying, that this should continue to support flows into Asian equity markets, unless you see a very hawkish Fed tonight. And I think the second part of that is really the pickup in debt flows recently, which are really very event related, which is a UP election related, and RBI having stepped away in the last a couple of days, it seems. So I think in the near term, INR could rally, run for a bit more. And FOMC aside, the general mode is also in FX is still fairly subdued, USD and a positive carry. So yes, it could run up a bit, but I think eventually, because I think there are just too many uncertainties right now on global policies and even, the potential changes in US policy that we might see from here on. I think anything beyond 65 is something I'd not expect in the next 6 months.
Okay, so both of you agree on the number 65. There are a bunch of positives coming for the rupee. The crude price itself has peaked off from that $55, moved towards 48, always a rupee positive, that one. And then, of course, the Indian inflation number has also been much more under control. Do you think, therefore, that, Deepali, the macros itself are changing? Up until a month ago, one thought that metals and crude could go on higher. But now they've very seminally peaked off. You've seen significant declines in both these commodities. As well, I think inflation has surprised on the downside. So do you think we have to alter the macros itself and believe that the rupee could get stronger?
Right. I mean, if you look at the macros, real is still pretty much on the stronger side. So if you were to believe that RBI has the same bias for real and hence INR, I don't think you can really say that you could see a significant appreciation on a dollar INR move. It really boils down to what RBI stance on intervention has been. I think they've stepped away from what I know. They've stepped away in the last couple of days with this euphoria coming in. But so I think they want the dust to settle down. And if there is a lot of speculative position building coming in, I think RBI will step in again. And in a scenario where export growth, relative outperformance is going to become even more important, it's difficult to see why RBI would prefer INR to outperform the region. So even from a global macro and India macro perspective, I think a very significant appreciation is probably unlikely.
Ruled out. Okay. Well, Mr. Venkatesh, what is your own sense? You said that 65 is about the cheapest the dollar gets. Do you think? I mean, what kind of a range will you give the rupee for, say, the next 6 months?
In the immediate term, definitely, because of the way in which the month end is coming in, the oil payments will be there, the ECB payments will be there. I think it should go right up to, say, around 66 quarter. I believe that with the FOMC rate decision happening, and maybe it is not a one-off, it will be another 3 rate hikes during the year. So if that happens, then definitely there could be much more pressure on the rupee. So I personally believe, if you ask me, for a 6-month sort of thing where the FOMC starts hiking rates and RBI is on an extended pause, then I would say that the rupee should tend to depreciate only. So to that much extent, we should see anywhere up to 66.5. From here to 66.5 is the range that I see.
Okay, 65, 66.5 is about the range. Well, let me get Sajjid now. Sajjid, as we were speaking, I don't know if you could see, we were flashing the RBI's latest real effective exchange rate data. And this data is, of course, even before the rupee was at 65.40. It was when probably the rupee was at 66.5. The currency in real effective exchange terms was overvalued by 16% against a basket of 36 currencies and overvalued by 27% against currencies of 6 major trading partners. Is this rupee overvaluation, 27 and 16%, a worry?
So I would not worry about that, Lata, because just because the base was 102,004.5 doesn't mean that that was the equilibrium level of the real effective exchange rate. In fact, that's a dynamic variable, and the equilibrium level itself will change as a function of productivity differentials between India and the rest of the world. I think one way to assess whether you're overvalued or not is just to look at the last couple of years, and what you'll see is the trade-weighted nominal effective exchange rate over the last 24 months has essentially been flat. It was down 4% the first year, it's climbed back up 4% the last year. So in nominal terms, on a trade-weighted basis, we haven't moved at all the last 2 years. And on a trade-weighted real basis, we've only moved up 4% in the last 2 years. Now, one can credibly argue that India's growth and productivity differentials are between 1 to 2% higher than its partner countries every year. So in the last 2 years, even the equilibrium real effective exchange rate has moved up by 2 or 3 or 4%. So I don't see any obvious signs of overvaluation. And if there was such a case, sustained overvaluation since 2004-05, we should find that our export share in global GDP or in global exports should be falling on a secular basis. We don't see that. We should see surging non-oil, non-gold imports. We don't see that. So I'm not sure there is a case that we are grossly overvalued. What I will say, however, one last point is, looking at the trade-weighted rate is sometimes a bit deceptive because it masks bilateral imbalances. What I worry about is the rupee versus the CNY. And over the last year, we have appreciated almost 10% in real terms against the CNY. And that's a concern because I think China remains a key import threat. 40% of our total trade deficit comes from China alone. So there are bilateral imbalances we need to worry about. But on a gross trade-weighted basis, I'm not sure we're really overvalued.
No, it was nobody's case that the rupee is overvalued from 2004, Sajjid. My point is exactly over the last 2 years. I mean, exactly the numbers you referred to. Let me take only the year-on-year number, and that was flashing for us as you were speaking. China has depreciated 6% over the past 1 year versus the dollar. We have appreciated 3%. So versus China, we have appreciated by 10%. And we do compete with them for many export destinations. So isn't that a worry?
Again, I would all go by relative values. I think absolute levels versus the dollar don't mean very much in this world where the dollar is moving against a basket of currencies. So if other currencies are appreciating and the rupee also appreciates in tandem, we're okay. But the point you make is a good one, that in a world of dollar strength, if China continues to depreciate at the pace it has been over the last year, and the rupee were not to depreciate as much, or in fact to go the other way and appreciate, I would get slightly concerned, because I think the threat from China in terms of imports and the trade deficit is more than the weight that China gets in either the 6-country or the 36-country trade-weighted basket. So in that sense, stability of the trade-weighted rate is slightly deceptive, because it is masking these emerging bilateral imbalances from the new FX reaction function that the Chinese have adopted.
Well, let me toss this to Deepali then. Deepali, would you worry if the rupee were to continue to remain this overvalued as the REER numbers indicate?
Right. I think I'll refer it back to the China point, Lata, because I think till about 2011, we saw significant export outperformance by India when you look at the rest of the world, which has fallen significantly since then. And partly it was because of competitiveness losses against China. So if you look at various sectors, what you find is that India remains competitive against China only versus very, very traditional sectors like textiles, agriculture, and China is still far ahead, like, on all of your electronics, machineries, motor vehicles, etc. So it's really this loss in competitiveness, which makes us, which made us analyze in terms of, if exchange rates really matter for export growth. And it turns out that exchange rate was a reasonable reason why we saw the export outperformance drop off after 2011. So I think, yes, in the broader scheme of things, it's really the relative outperformance versus the rest of the Asia versus China, which will be very important. So to me, rear will probably be still important.
Okay, well, I just want to scratch this point a little further. Let's take a break. Let me thank Mr. Venkatesh for joining in, but keep the economists. I just want to check out whether the Reserve Bank has any options really to keep the rupee from surging and to save the economy probably from cheap imports. We are back in a minute.